Hello, welcome to Eliasoft webinar. My name is Alejandro Delgado, and thank you for joining us today in the second session of a series of webinars with the topic Prospect for the Energy Markets in Europe from 2021. Our first speaker today will be Oriol Salto, Data Analysis and Modeling Director of Eliasoft, that will analyze the evolution of the European energy markets. Also, today we have invited two speakers from PricewaterhouseCoopers that will talk about the vision of the PPA market for the consumer in the current context. They are Alberto Martín, Energy Sector Consulting Principal with 15 years of experience in the energy sector, and Reyes Gómez, Energy Sector Legal Services Principal with 10 years of experience with PwC. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoy the webinar. Oriol, please share your slides.
Good morning, everybody. Thank you, Alejandro. My name is Oriol Salto. I'm in charge of data analysis and data modeling at Eliasoft, and I'll be the first speaker today. Basically, I will cover the first part of the webinar, that it's the evolution of the European markets, European energy markets. Starting from 2021 and looking ahead. Energy markets are all over the news right now. Energy prices are high, power prices, gas prices, CO2 prices, all are them very high. But I will try to put them into some perspective, looking at how 2020 closed and how they behaved at the beginning of this year, and trying to see how this is a temporary situation. So first, a few words about our company. In Eliasoft, we provide forecasting services for covering all the European energy markets, forecast at all the time horizons from short-term up to long-term reports up to 30 years ahead. We forecast any variable that can be of interest for the energy sector, obviously market prices and demand, but also renewable energy, weather variables, socioeconomic indexes, fuel prices, etc. And not only daily markets, but also intraday markets, ancillary services. We also make all kinds of market energy reports. We make expert reports for court proceedings and lawsuits, and also analysis on the impact of the market prices of new taxes or renewable actions, or the influence of CO2 prices. Basically, anything that can have an impact in the market and their prices. The methodology that we are using is a hybrid technology that uses some kind of the classical statistical techniques like regression, econometrics, and time series analysis, and also more advanced techniques like artificial intelligence and machine learning. The 3 points that we like to stress about our methodology is that it is completely scientifically based, so it gives a consistent forecast over time. And basically, what we can say that we have been working with this methodology for more than 20 years in the energy market, providing a reliable forecast. So first, we all know where we are in terms of this pandemic. Vaccination start in the European countries at the same time that we are seeing how the pandemic continues spreading. We are witnessing what looks like the beginning of the third hit of this pandemic. The effects of the vaccination probably will not be seen before summer, so we are still in great uncertainty on how the global economy will evolve and how it will impact the energy demand and the energy markets. So now, as I will say, as I said, I will try to put into some perspectives how are the fuel and power prices right now. So this is how we are right now in terms of Brent oil prices. 2020 closed at an average price that went back to the levels of 2005, more or less. Right now, just at the beginning of the year, we are seeing quite high prices. So if we look into more detail, right now, in the last week, we surpassed the $50 per megawatt, per barrel, and we are somehow approaching this $60 barrier. Gas prices are were also historically low during the deepest of the economic crisis, but they recovered already, and right now we are very high. This is the last week average, but on Wednesday the market closed at above 26 euros per megawatt hour, but right now it's a little bit lower. So yes, right now they are quite high prices. CO2 prices, the CO2 emission rate prices market is a very volatile market, and right now we are above the 30 euros per ton, above 32, and right now they are historical high prices also. So all this is what we are seeing in the news right now. If we will focus now in the in the power markets, I will not have time to go over all the European markets, but but we can provide any kind of energy sector report covering any aspect, any market, any any impact that could be in the energy prices. And also for our clients, we are developing a data platform that I will show you very quick. This is it's a data and forecast platform where you will have available all all the European markets, also fuel markets. You see gas, oil, and CO2. Basically, you can see any variable of all the market. In this case, we have the electricity demand in Spain, and you can see how for the last week demand is really high due to the low temperatures, something that is pushing the electricity market prices. And as you can see, they have been really high, above nearly 120 euros per megawatt hour on the last day. In fact, if we show the daily average of these prices, this price nearly 95 euros was seen on last week on January 8th, and in fact it is the highest daily average of the whole history, the history of the market. I will not show the whole history, but to put it into some perspective, looking at the whole 2020, you can see how high are the prices right now. So going back to my slides, as I said, I will basically do kind of a global view of how 2020 closed. This is the variation of the electricity demand of 2020 month by month compared with 2019. And basically you can see how on the deepest part of the crisis, the electricity demand dropped between 10 and 20%, depending on the country. But already by the end of the year, depending also on the weather conditions, but basically the previous levels of the crisis were also reached. And in December, demand was already exceeding previous year's levels due to basically the low temperatures. Low temperatures that continued also at the beginning of 2021. That is the current situation that we are now living. This is the variation of prices, and you can see prices drop already 60% in some of the countries, between 40 and 20%. The situation already at the beginning of the year in January, so before COVID, was already of lower prices, but by the end of the year, December was almost 40% higher in all the countries, in all the markets, and that's what we are seeing right now. These are the daily average for all these European markets, and the graphic can be a little misleading because prices in UK are really high. We are talking about daily averages above 200 euros per megawatt, hourly prices above 1,000 euros per megawatt hour. So the rest of the markets look like they have very low prices, but they are, you see, above the 50 euros per megawatt hours. That is quite high price. And as I said, the price for instance for the Spanish market of this January 8th was the higher of the whole history of the market. So right now a very high prices situation, but as I said, it's kind of a temporary situation due to basically the cold weather that we are experiencing these weeks in Europe. So looking now a bit more into the future, how the forward curves in the futures markets look like. This is the case for the Brent oil, and as you can see right now, in the short and mid-term, futures prices are higher than the long-term price equilibrium that is around $50 per barrel. Similar situation, a little more exaggerated also for the gas, for the TTF gas. So prices in the short term above 25 euros per megawatt hour, while the long-term price equilibrium is around 15 euros per megawatt. And for power prices, quite similar situation. Very high prices right now for Cal 22. This is the consequence of having very high spot prices right now, but all the forward curves on all the markets are going down in the horizon. And moving already to the last part, we'll try to look a little more into the future. So what we have to take into account when we are trying to forecast electricity or energy prices at the long term. Basically, trying to understand that the situation that we're living right now with high demand of gas and electricity, high prices of gas and electricity, is basically a temporary situation due to the low temperatures that we are seeing right now. Oil prices and CO2 prices are in an upward trend. Basically, probably they are seeing a future recovery of the global economy. We will see how it evolves. And right now, the uncertainty in the midterm, trying to see how this third hit of the pandemic will affect the recovery that we are trying to see in the global economy. So basically, this is what is affecting the short and the midterm. Looking at the longer term, basically, we are seeing the same price levels that we were seeing before the crisis. But we will have to see how these gas and CO2 prices evolve. But because this gas will be the backup fuel for the renewables in this energy transition, so gas price will have an impact, and also obviously the CO2 prices. Basically, what we have seen is that the energy sector in Europe was proved to be quite strong during this crisis. The renewable energy capacities keep growing at the more or less the expected rate. Obviously, there have been some delays due to supply problems during the crisis, but the energy sector is robust. It shows its strength, and we are seeing, let's see, a bright future for this sector. And as always, remember how important it is to have a reliable price forecasting at the long term, because these forecasts are an input, an important, an essential input to your financial models. So if you want to have an accurate estimate of the returns that a renewable energy project will have along all the history of its functioning into the future, you'll need hourly forecast for the long term. So I'm reaching the end of my available time. So basically, a summary of what I've said. We are seeing right now temporary situation of high prices due to the cold weather. Uncertainty is on the midterm due to how the global economy will recover until we go back to what was called the normality before the crisis. Long term, things look stable, and investments in renewable energy projects if they were feasible and viable before the crisis, they are still. And I will finish inviting you already to our next webinar. It will be the third webinar, the third webinar on this series, and it will be held on February 18th. And in this case, we will have invited panelists from energy. And I can also announce you our next webinar that it will be on March 18th. And in that case, we will have panelists from EY, Ernst & Young, and it will be the fourth webinar on this series. So that's all from my part. Thank you, Alejandro.
Thank you very much, Oriol. Great presentation. Alberto, when you're ready, please share your slides.
Hello. Well,
yeah, we can hear you.
Okay.
Can you make the presentation in full screen, please?
Yeah.
Thank you. Great.
So, thank you very much, Alejandro, and thank you very much, Oriol, for the presentation. It was very, really interesting, taking into account the context of COVID-19. So, this part of the webinar, we are trying to solve or to answer the question that how can PPAs be an opportunity for energy consumers in this context? Okay. I am Alberto Martin. I am principal for the energy practice of PwC Spain. And Reyes is going to share the presentation with me, and he's principal of the tax and legal services of PwC Spain. So, what are we talking of this webinar? Okay, we are going to explain what is a PPA contract, taking into account the consumer point of view. Okay, we are take a little leap on what's the impact of the PPA on the consumer's operations, the business case that the consumer needs to take into account, the requirements taking the corporate social responsibility point of view, the potential accounting and tax impacts when contracting a PPA, all the topics related with the hiring of the tendering processes, and the risk to mitigate in the contract you are going to sign, okay? And some view on regulatory provisions with impacts on PPAs. And of course, the help and the assessment that PwC gives to the client, taking into account the PPA topic. So first of all, the energy and this sector is changing very quickly, very fast. There is a lot of regulatory changes and a lot of technological changes as well. It includes, for instance, the self-consumption technologies, the storage in batteries as well. Of course, the new renewable capacity actions that are going to have in January. Okay, the modifications of the TPA structures and their calculation that they are going to publish in April. Okay. Of course, and related with the TPA, the segregation and the separation between the TPAs of the customer and the system charges. I think the most important is the approval of the electro-intensive consumer special status. That one requirement of this status is the PPA contracting in order to have the helps the consumption of the client, and the creation of the fund for the sustainability of the electric system. Okay, they are going. All these changes are going to change the way that the customers pay the energy and the way they are contracting the energy, okay? So it's very important to have a long-term view of the prices, as Oriol said before. And of course, this context is an opportunity for taking advantage of this context in order to contracting a PPA and have access to bids to this kind of energy, okay? So what means a PPA for the customer? Okay, it's a head of the consumption in a long-term view. Okay, with a PPA, you can cover your energy from the GR1 to the GR10. And in top of that, you as the customer, we always need to cover your short-term consumption with OMIP or with other future markets. And of course, if you want to be not hedged and to be indexed to OMIP. And from the generation, for the generator, it means a fixed income. A fixed income taking into account the credit quality of the off-taker as well. Which are the drivers for the contract? Okay, for the consumer, it's not only a matter of economics, it's a matter of the hedge price, as I said before, and it allows to the customer to diversify their hedging strategy, the portfolio management, etc. Okay, the PPA also helps the client in order to improve their brand image and in order to comply with the corporate social responsibility objectives established in the company or even by the shareholder, okay? And it's not only a thing of buying green certificates of guarantees of origin in Spain, it means the development of new green assets because of the PPA contracting by the customer. Okay, it's not that you are contracting green energy that it's already in the market. It means that you are helping with the decarbonization and with the energy transition, developing a new asset related to the PPA. Okay, and of course, the customer can invest on the asset related with the PPA. It's a choice that they need to do. Okay, and of course, the PPA contracting implies that it's a long-term contract and a long-term relationship with your partner. Okay, it's not the way they buy the energy change. So they are not tendering the energy on a year by year basis. They tender the energy one time, today, the next year or whatever, and they sign a contract in order to compromise the energy in the next 10 years. Okay. And therefore, from the renewable generator point of view, it helps to the bankability of the project, it mitigates the risk, and it allows them to develop new projects and new geographies for international expansion, for instance. Okay. The PPA market is growing a lot in these years. A lot of companies are investing in these kind of instruments, not only in Europe. In fact, in America, both North and Latin America, in Europe, I think the last country in following this tendency is Spain. Okay, and this is because why the PPA are growing a lot is because of the cost of the energy is falling a lot in the last years. Okay, well, when contracting a PPA, we need to align for interest of 4 different players. The retailer, in Spain, we need a retailer in order to sell the energy to the client, to the taker, okay? Of course, the investor or the owner of the project, and the bank that gives the financing of the financing for the project, okay? So when an energy consumer analyzes a PPA, what topics they need to cover? Okay, we think they need to cover at least 5 topics. The impact on the consumer's operations, of course, the business case, the corporate responsibility, the corporate social responsibility needs of the company, the potential accounting and tax impacts, and of course, all risks related with the long-term relationships, and they need to write or to elaborate a contract that mitigate all that risks. Okay. Related with the client operations, they need to choose the type of PPA. It's not the same a physical PPA that a financial PPA. And even when talking about a physical PPA, there are a lot of different structure. If you can access directly to our energy generator, or you access the energy generator through a retailer, okay? You need to balance the pros and the cons of a physical or a financial contract and select the type that it fits to your company the most, okay? Of course, it's not the same that pay as produced contract and that a baseload contract, of even a pay as profile contract. And the way the energy generator or the retailer gives the energy to the consumer is very important, as I will say in the next slide. Okay, and of course the duration, the combination of different terms and different type of PPAs results in different prices for the consumer. Okay, different prices, taking into account that it could be a fixed price for the PPA or an indexed price to OMIE or even to OMIP, taking into account, for instance, cap and floors or whatever. Okay, this is a tailor-made instrument that it's that you have to negotiate with the energy generator in order to share the agreement. Okay. Of course, another topic to cover is the warranty for origin. The PPA contract normally have the 10-year warranty for origin, but the rest of your energy you need to choose if you want to cover your energy through a warranty of origin or not. Okay. Even not only the warranty for origin of the rest of the energy, but also the kind of price that you want to pay for the rest of your energy. You can agree a fixed price for the rest of your energy, an indexed price to OMIE, an indexed price to OMIP, or even a directly access to the market. Okay. Of course, you need to choose the location of the asset and the ownership of the asset. It's not the same an on-site PPA that an off-site PPA. On-site PPA is more related with the self-consumption structure, and the off-site PPA is a PPA in other location, and the client needs to pay the TPAs in order to transport the energy. Okay. Related with the profile, it's very, very important to analyze the operation and the way that you consume the energy. It's not the same that you are contracting a PPA, that the PPA gives you the energy in solar hours, okay? And the solar hours are going to be less and less competitive in the future. The question is when and how much, okay? And of course, maybe during some months, even some days, on even particular days, you as consumer consume less energy than that the PPA is giving to you. So it can produce some inefficiency in the way you consume the energy, and of course, extra cost for the PPA, okay? Once you analyze the structure, the way you consume the energy, of course, you need long-term pool prices in hourly basis, as Aleasoft said before, okay? And you need to compare the efficiency between the spot and the forward price in order to calibrate these prices, okay? You need to compare the different offers for different players in a homogeneous way. I mean, it's not the same base load price than a pay-as-produced PV price. So you need to make them comparable, okay? Of course, the warranties of origin that are more comparable in the first wave. And of course, the margin of the retailer, of the fees of the retailer that they use to cover the rest of the energy. Okay, once you have the offers, okay, you have to validate them. You have to put numbers in place for the different suppliers. You have to, you need to validate the savings in all the duration of the PPA, taking into account all your costs, not only the PPA, the energy of the PPA, but also the energy of the rest of the contract. Okay, you need to compare the contract in the best and the worst case. Because the 10-year contract is a long-term contract, and you have to consider all possible scenarios. Okay. And also, as I said before, you need to cover the corporate social responsibility needs of the company. Okay, a lot of companies are growing in initiatives. Okay, a lot of companies are setting goals in order to achieve 100% of renewable consumption for the assets. Okay, and a lot of companies in Europe and also in Spain are considering and are wondering what about PPA contracts in order to not only achieve savings in the contract, but also achieves goals of the corporate social responsibility plan. Okay, and PPAs are growing in these initiatives, not only green of warranties of origin certificates, but also PPAs. Okay, and what kind of needs the client or the consumer could have? Okay, for instance, the branding of the asset, of the green assets. Maybe you have to brand the asset, and you have to develop a marketing plan in order to share with your community that you are contracting green energy and you are helping with the energy transition. Okay, maybe you need to invest in the asset. Okay, in order to have a firm commitment with the green energy. A lot of companies are doing newspaper release, a communication plan, a marketing plan. Even some companies are preparing some plans that, for instance, for the hotels, that the customer that going into the room, they see into a panel that's what percentage of their energy that they are using in the night of the hotel are coming from a green asset or are coming from not a green asset. Okay. From accounting point of view, there is a lot of implications. You need to cover all the topics of the contract. Once you have the contract, you have to analyze it in order to be sure that you are reflecting the PPA currently in your financial statements. Okay, maybe you have risk of be a derivative, maybe the PPA could be a lease, operative leasing, maybe you have to incorporate the PPA or the assets and liabilities because you are using all the PPA, so the green asset is yours if you are renting or leasing a car. Okay, you have to value the PPA contract because maybe it could have an impact on your profit and loss account. Okay, if you invest, as you as customer invest in the green assets, you need to take into account a lot of sensibilities of the PPA, that it could be the hours, the equivalent hours, the OPEX, the volume, the price, or whatever, okay? And of course, you have to, the most important thing is the warranties scheme, okay? Because depending on the credit quality of the customer, the retailer and the asset will require you more or less warranties and different type, okay? So Reyes, if you want to join the explanation.
Thank you very much, Alberto. That was a great presentation of the PPA process for the consumer. Now, yeah, Reyes, if you can share your slides, please.
Thank you very much, Alberto. And thank you very much to Aliasoft for inviting us. And good morning to everybody who has joined this webinar. I hope that you can see now the slides. And as Alejandro and Alberto said, I am principal at PwC in the regulatory department. I am expert in energy law. And from the legal services perspective, we have been giving advice to medium-sized and large companies which wish to enter into PPAs. And since the end of 2017, we have been advising such customers. And what we usually tell them are two messages that we think that are very important. Here in the PPA, we are not dealing with an adhesion contract. It has to be negotiated in all of the terms and conditions. It has to be suited to the needs and the interests of the parties. So in this sense, it is very important to understand which are the risks that arise from a PPA. The second message that we usually give to our clients is that the legal services of the company, which at the end will have to review the PPA itself, should be involved from the beginning, because sometimes it happens that only the commercial financial team of the customer is involved at the beginning. So what we tend to do is to organize workshops which are focused not only to the commercial team, but also to the legal services, so they can understand what are the main implications of the PPA. So here, what we wanted to highlight at the beginning of this presentation is, as Alberto previously announced, that the risks from a PPA will depend on the structure that we are signing. So when we are dealing with a financial PPA, for instance, we have many risks that are related to the structure of the contract itself. It works like a settlement for differences. It is like a virtual or a synthetic contract, which there are credit concerns for both parties because we see that the payments flows in both directions. So that is why they are usually covered by guarantees which are granted by the parties and which may vary from its type, because we can talk about a parent company guarantee, first demand bank guarantee, or even a surety bond, cash deposit, letter of credit. There are different choices which have to be chosen by the parties. Another risk that Alberto also commented is that some terms of or conditions of a financial PPA can be considered as a freestanding derivatives. So this will have accountancy implications, and it is also important that it will appear in the balance sheet of the company. And finally, we can also point out another risk, which is the complexity that these kind of contracts can add to the customer, because the customer will have the physical supply energy from one side, which will be a short-term agreement normally. This will also give him the advantage to change retailer whenever he wants, but also he will have to deal with the financial PPA for the settlement of the differences depending on the strike price that has been agreed. When we talk about a physical PPA, we have two different contracts. We have the on-site PPA, which is more related to self-consumption, and also the off-site PPA, which has been the most frequent type of contract that has been signed in Spain since the end of 2017. But we are seeing now that the on-site PPAs are boosting and are fostering because a recent royal decree from 2019 to 244 has raised or eliminated some of the regulatory barriers of the self-consumption, and it has stated that the energy self-consumed is now free from tolls and charges. And that is why we are seeing that many companies, many producers, engineers, not only large-sized companies, but also medium or small-sized companies are offering this self-consumption business. When we are talking about an on-site PPA, we can also take into consideration the risk which is related to the economic solvency of the parties, and sometimes a guarantee will be called. But also we are talking about an operational risk. Why? Because the asset is going to be placed inside of the location of the industry or the domestic consumer. So the unavailability, the malfunctioning, or the outage of the asset will be suffered by the client, who will have to cover its consumption with the energy that is supplied from the grid by the retailer in those circumstances. But also, it is very important to regulate in the agreement the use of the rights of use of the land, because the asset is going to be placed in the property, in the floor, or in the rooftop of the industry or in the customer. So either we can foresee those kind of rights of use, rights of occupation, easement rights in the contractual PPA, but also we can sign another different agreement, which is a lease agreement or a surface agreement, which can be separated in another contractual instrument. And finally, when we talk about off-site PPAs, the main risks are related to counterparty risk, because it could happen that the spot prices or future prices rise during the execution of the contract, because we are dealing with medium or long-term contracts. So the counterparty, which probably will be a retailer, maybe would want to breach the contract with an early termination clause in order to leave the contract earlier. So that is why we usually recommend to our clients that it is very important to pay attention not only to the events of default of the contract, but also what are the consequences. What is the payment for compensation? Are we going to agree on a mark-to-market compensation, or are we going to fix an amount, euros per megawatt hour, for the rest of the contract in order to create a disincentive for the counterparty to breach the contract? Another risk could also be that the consumer overpays for the electricity, because the prices can also fall down during the execution of the agreement. So that is a risk that should be considered. And we can also include revision clauses for the price, which may increase the price offered by the bidder. And finally, there is another under consumption risk, because as Alberto previously said, in PPA contracts, it is very common and standard that we estimate the volume that is going to be consumed by the client. So in this sense, it could happen that estimated volume changes throughout the execution of the agreement. We have seen in the pandemic that many companies had to stop their production, and this has implications in the complying of the contract, of course. And we have to pay attention to which are the consequences in case the client does not offtake all the energy that has been previously estimated and agreed. There are also other important things to be considered. We are talking about long-term agreements for 10, 12 years, but there are also other agreements which we have seen, which have a length of 5 or 7 years, and from that moment we can see the first savings. And also, it is very important that we take into consideration change in law clauses. Why? We are dealing with a medium or long-term agreement, so it is very easy that during the execution of the agreement, there are some changes in regulations, but also tax changes. And this could materially and adversely affect the parties' obligations and impact on the balance of their original financial position. In Spain, we have an implicit clause, which is called rebus sic stantibus, which is applied even if in the contract we do not foresee anything, but we strongly recommend our clients to include this kind of clauses because it will be used in the future, and it is very important to state which are the events that are going to trigger this clause, but also which are the consequences. If we have to reach an agreement with the other party, are we going to leave this decision for an expert determination, or are we going to apply the dispute resolution clause, for instance, that would lead this conflict to arbitration or to the courts? And finally, it is very important in the contract to foresee the guarantees of origin, which is one of the essential obligations, because as Alberto previously said, one of the main reasons why the clients are entering into this kind of agreements is that they want to obtain these guarantees of origin. And we have to pay attention to the regulation, which is a ministerial order of 2007, but also the circular of our National Commission of Markets and Competition of 2018. And we have to know which is all the system which is involved in the issuance, transfer, and redemption of the guarantees of origin in favor of the customer. In the following slide, we can see that disintermediation in the value of chain can favor competitiveness of the PPA price, but also it can add complexity to the contract. So we can see very easy structures or simple structures as the first one, where the consumer only enters into an agreement with the retailer, which is a structure which is usually undertaken with incumbent retailers, with utilities which are integrated, which have a large portfolio of renewable assets behind. So we can just enter into one agreement where the consumer would not assume the operational risk, and this gives us a medium or high price competitiveness. We can also enter into an agreement with a medium-sized or an independent retailer where this company will probably have to enter into another back-to-back agreement in order to provide the consumer a baseload product. So in this structure, the second one that we are seeing, the consumer does not assume operational risks, but the price competitiveness is medium or low. In the third structure, we see that the consumer, is going to enter into two different agreements, one with the retailer and another with the producer. This will add operational risks coming from the producer, but also it will be a price competitiveness medium or low. The two final structures are much more complex. They will lead to very high price competitiveness, but also, as we say, they will add complexity. So it will be very hard that it is practical implementation of these kind of structures. The fourth one that we see here is what we call an exogenous PPA, where the consumer enters into an agreement with the retailer in relation to the index price, where the retailer does not provide the PPA itself, but this is going to be provided by the trader, what we call the trader, who will enter into an agreement with the producer. And in this sense, it will be the trader who assumes most of the operational risks, including the peak risk or coeficiente de apuntamiento, as we call it here in Spain. And there's another more complex structure where the consumer will have to enter into three different agreements with the producer, trader, and retailer, which is not highly recommended. Finally, in this slide, we can see other clauses that are very important and with high implication and impact on price. Of course, we have to pay attention to those clauses dealing with invoicing. When are we going to pay? How? What happens when we dispute an invoice? Are there going to be late payment interest that are accrued? which are the guarantees and on what basis are they going to be called for, the events of default, as we previously said, and its effects, and also all the penalties or all the consequences, compensations that can be agreed between the parties in case there is an unavailability of the asset at the start date of supply, because the asset cannot reach, for instance, the commercial operation date in time, or what happens when there is a breaching of the obligations for the volumes that have to be supplied or of the volumes that have to be consumed by the client. In the next slide, we can see which are the recent regulations that are impacting our PPA business here in Spain. We can see that the renewable actions have a negative impact because there is a disincentive in this kind of physical PPAs, because there is a royal decree which prevents successful bidders from declaring physical bilateral contracts with facilities under the economic regime for renewable energy, but they will not be prevented from signing financial PPAs, but it is forbidden to sign physical bilateral PPAs. There are, as Alberto said, other regulations concerning electro-intensive consumers that will oblige these kind of consumers to enter into a medium or long-term agreements for at least 10% of their annual electricity consumption. And there is a state guarantee that will be granted for these kind of contracts to cover the risks, and which will come from the Spanish Reserve Fund for Guarantees of Electro-Intensive Entities. So this is a very positive message and a very positive regulation for the PPA market. Also in Royal Decree Law 15/2018, we saw that consumers who, due to technical characteristics, could not be constituted as direct consumers in the market, could sign directly the PPAs with the producer, because as we previously said, normally you have to sign the contract with a retailer, with the only exception of self-consumption PPAs, where the producer or an ESCO, an energy services company, can sign directly the agreement with the consumer. And also it will be possible, but pending from our future regulatory development, that there is more than one retailer per point of consumption. And finally, as I said, there a royal decree of self-consumption that has eliminated many barriers to self-consumption, which is very positive for the on-site PPAs. Finally, here it is not, we cannot see recent regulation that it is also important, that is the Royal Decree Law for the modernization of the public administration and for the plan of recovery, and what you know, it is the European funds, which has also prevented or eliminated the prohibition for the public administration to sign long-term contracts, because the supply contracts had at a term of 5 years, but now the public administration can sign contracts for more than 5 years, until 10 years for energy contracts. So this is very interesting also. And finally, in PwC, we can help you in this whole process of the PPA. We have many teams which are implicated in this advice, not only business advice, economic advice, financial advice, tax advice, and my advice, which will be a legal advice to the client. And we can move from the diagnosis which is necessary to understand which kind of PPA has to be signed and which is the volume of energy that has to be included in the fixed price PPA. But also we can help you to draft the tender itself, to help you in the pre-selection of the bidders which have the most competitive offers. And we can advise you, of course, in the bilateral negotiations with the successful bidder, and to draft the contract itself or review the contract that will be given by the supplier. So here we have finished from this presentation, and thank you very much.
Very detailed explanation, Reyes. Thank you very much. We will start now the Q&A section of this webinar. We will try to answer as many questions as possible in the time we have left. I believe Uriol already has a couple of questions. Uriol?
Yes, yes, there are several questions. Okay, I'll start with this one. The method you describe are statistical and trend-based. Do you also consider fundamental drivers like merit order and marginal cost? And are also your forecasts bankable and useful for audits? Okay, the first question. Yeah, our methodology is a hybrid methodology, so we combine several methods in several techniques. So yes, the trend analysis of the time series is one of the methods, but we also use econometrics. We also calculate the evolution of the thermal gap and how it is filled. We statistically fill them per year, per month, week, day, hour, so yes, it's not only a statistical analysis of the time series, but also of the fundamentals of how this thermal gap is filled and how is the marginal price set for every technology. And about the bankability of our forecast, yes, our forecasts are bankable for mainly, well, I don't really know Spanish banks, of course, but also I think some other European banks, and also some audit companies are recommending our forecasting reports.
Thank you, Uriol. I see that you have selected other questions. If you can answer those.
Yes, I can go ahead. Why do you think power prices will continue on semi-flat curves or even increase in Germany when more renewables are put into the grid? And we know that higher share of renewables means lower prices. Okay, so about long-term price forecasting. Yes, obviously more renewable capacity will mean more renewable energy into the system. Usually this means lower costs, so this leads to lower prices. But supply is only one part of the market. We have demand on the other side. That is what brings the equilibrium between supply and demand. So at the long term, even at the midterm, we are going to see an increase in the demand due to the energy transition. We need the electrification of the transportation, electrification of industrial processes, production of hydrogen. Hydrogen is going to play a very important role. It's like the new fuel, the fuel of the future. So more renewable energy into the system, more demand that will have to be met with the renewable energy. So what we will see in the future is that this equilibrium between energy supply and energy demand must be kept in order for the market to function. Otherwise, if prices go too low, then nobody's going to invest in new renewable capacity. So there will be less supply and prices will go up again. If prices go too high, then the demand will go down, so prices will go down again. So this equilibrium that we are seeing right now is it's what our models forecast into the future. So obviously power prices will fluctuate, and maybe they can fluctuate even a little more in the future with more renewable and variable production, but the equilibrium, the average prices will be kept into the future. So yes, more renewable energy is only one part of the problem. On the other hand, we have the demand. That is what's going to keep this equilibrium.
Thank you very much, Uriol. Great answer. Alberto, I think you have a question already.
Yes, the audience is asking about the difference in terms of risks between financial and physical PPAs. So this is a very, very interesting question. We not have enough time to cover it, but they are two different products. Okay, one, the financial PPA is a derivative, is a financial derivative. So you have to value it and you have to include it into your financial statements. Okay, and it's a product, in an independent product of the energy consumption. So you don't need to have enough energy consumption in order to contract a financial PPA. But the value of the PPA, of the financial PPA, may vary over the time, and it can move your profit and loss account during the term of the PPA. But as it is an independent instrument, it's more flexible. So you can assign the result of the financial PPA in just one asset or in several countries, or whatever the customer needs. Okay, so this is a balance between risk and opportunities between these two kind of products, and the customer needs to choose between them.
Thank you very much, Alberto. Uriel, I see you have another answer ready.
Yes, okay, I'll try to. Yeah, I thought I was mute. Not okay. So, do you expect energy demand declines during the next 2 months due to the COVID? Okay, that's one of the great questions about the uncertainty that we were talking about at the midterm. So, demand will obviously will go down during the next month as the temperature rises. So during spring, usually demand is much lower because of the mild temperatures that we're going to see. So demand will go down. It's difficult to think of in a demand variation as deep as we saw last year during March and April. It's difficult to say. Demand will go down if the pandemic gets worse. Demand will go even lower, but it's difficult to it will be difficult to see lower levels or as much lower as we saw last year.
Thank you very much, Uriel. Reyes, do you have any questions at hand?
Yeah, I see a question which is related to how long is the advice procedure, the processing of the tender and the drafting of the contract and everything. So I would say that this is a complex process because it has to involve many parties, not only in relation to the customer or the client itself, but also we have to start a tender with the suppliers, and we can have different tenders in order to obtain the most competitive price. So we are talking about like 4 months if we are optimistic, and sometimes we have also included more time in the advice. But I think that considering the whole tendering process, also the negotiation and the drafting and signing of the PPA, being optimistic, it could be 4 months, but it could also last for longer. So this is very typical.
Thank you very much, Reyes. Uriel, do you have one question selected?
Yes, let me see which one. Okay. How feasible is that current wholesale market based on marginal prices will be transformed, as some latest news are already considering? According to you, when that might happen? Thanks. Okay, the marginal pricing system that we have right now in Spain is the same that we are having in all the European countries. We are considering Europe as a single energy market. So changing the pricing procedure in one of the market, it's not to be seen in the near or in the short midterm future. it has been said, it has been questioned that with more renewable energy in the market, that has no, let's say, variable cost because they don't use fuels, that the marginal price will not give the correct price mark for investors and for consumers. What we have seen is, at least in Spain, during the last 10-15 years, when there were basically no renewable production, just hydropower, but it's dispatchable in this case. But there were basically no wind nor solar energy. The wind energy capacity has grown by several times. So, and the pricing system has been working and has been giving the correct price during all this time. So as the changes in the energy market are, let's say, slow or gradual or not radical, the market auto regulates itself. So as things are going, if the capacity targets that we are trying to reach in 2030 are met at a regular rate without trying to push them too hard, we think, and that's what we are seeing, that's our experience, we think that the marginal pricing system that we are using right now in all the European markets will continue working, and it's been always said that they could change in the future, but we are not seeing them. We are not seeing it changing in the future.
Thank you, Uriol. Reyes, I believe you have a question selected.
Yes, there's a question regarding if the customer can purchase all the guarantees of origin linked to the whole consumption. And with regard to this question, the answer is yes. You can agree on the purchase of the guarantees of origin for all the energy, but with regard to the price, it will be very common or very usual that the retailer wants to fix the price only for the PPA volume, and for the rest of the index volume of energy, it will be more frequent that the retailer just wants to close for 1 or 2 years, but not to close for the whole term of the contract. But we also have seen some cases where the retailers can close the price for the whole volume for the whole term of the agreement. But the retailers see that there is a lot of risk of fixing the price at the beginning. So sometimes there's a difference between the guarantees of origin linked to the PPA itself and to the rest of the curve of consumption of the client.
Okay, thank you, Reyes. Perfect. We will answer the remaining questions directly by email. And thank you again, Uriol, Alberto, and Reyes for your presentations, and the audience for joining. Have a nice day.
Thank you very much.
Thank you.